Hey everybody, Marty Mazur. Good afternoon, 26th of February 2016. Thought I'd just show you the charts again today, get that out of the way, and set you up for tomorrow or Sunday with my weekend commentary. The stuff I really want you paying attention to. But in the meantime, let's just take a look at the charts. I dated this one yesterday just to remind you where we were in that conversation that we had yesterday, where the market came through what had been prior resistance and closed above that. And I said we could see the market continue to go higher. Of course, we could see it come crashing back down, or we could see it go higher and then come back and maybe test this level a few times and see if we can make that support. Well, let's see what actually happened today. Sure enough, that last part is exactly what happened. We came up, hit the up part of this particular trend line, which is a positive trend line. We have three higher highs. We have a high and then two higher highs. Came back down off of that and then found support at what was previously resistance. Too soon to tell if that's going to hold, but that's a pretty good sign. The S&P closed down just 3 points today, and I'll talk about why I think that was a success given what happened in the price of oil today. So folks, again, just to kind of remind you the logic behind these numbers, because it's not just lines on charts. It's where the market peaked here on December 29th, came all the way back down. Folks bought that, okay, and pushed the market higher. If people were short the market here, meaning if they had borrowed stocks, sold them, expect to buy them back later for a profit because they thought the market was going a bunch lower, and sentiment was terrible right about then. So I think there were a lot of shorts in the market. They got scared as the market came and traded itself higher. When it peaked right here and came down, then the shorts started looking better, started doing pretty well. And right here was an opportunity for the shorts to get out, to buy back those positions and recover their losses. It was also the opportunity for people who weren't in the market here, who wanted to be, those who were on the sidelines, who missed an opportunity to get in. They jumped in. So we had the combination of short covering and new money coming in, no doubt, pushing the market noticeably higher. Then we got to this level, stalled out, and you may recall I was sitting here saying, this is an interesting technical trend. Look for that to bounce. And down here I was saying, look for this to bounce because of the oversold nature of the market and other technical chart trends. And then sure enough, we bounced right up against that resistance level once again, gave the folks who didn't get out here the opportunity to do that. The market came down, shorts piled on perhaps. Right here when oil turned, which was a real surprise to me because I thought the market was going lower, the market turned with it. We came up yesterday again and closed right here, as I already talked about. And so here we sit today looking a lot like we did back here. Doesn't mean this has to repeat itself and we're going to jump up to this next level, but it very well could. Yesterday I talked about the 50-day moving average. Today we remained above that. That's also a bullish sign. We've got this movement of these higher highs. That's also another bullish sign. So technically, I think one could be pretty constructive on the market. The economic data that's come out the last couple of days, however, suggests to me that the Fed is going to be a big part of the conversation next week. And of course, we have the jobs number on Friday. So there's a lot of stuff beyond these charts that could influence this market. And I still think that the risk still may be to the downside, as I've been talking about throughout the last few weeks, that it wouldn't surprise me to see the market trade lower, ultimately lower below these levels here, these previous support levels before we finally bottom for the year. Does not have to happen that way. This is, again, I think you got to be constructive on a near-term basis. Would not surprise me to, at least at the beginning of the week, see the market begin to trade higher. Doesn't really matter for you and me, folks, because we're long-term investors, but I think it does matter to understand kind of what does push the market around on a short-term basis. I think that helps us feel better about what we're doing on a long-term basis. Today's action was, once again, a lot to do with oil. This is today, the mountain chart is oil. Oil continues to trade. Stocks start trading right about there at 9:30 in the morning, somewhere in there. You can see stocks shot right up to meet with oil. I was actually thinking it was a lot of those technicals. I was pretty encouraged that yesterday's story about the market really moving higher on those technical indicators was making sense. But when oil rolled over, stocks just couldn't resist. However, they held up, I think, pretty nicely. When you look at where oil ultimately was down, it was down close to 1%, where the S&P was just down 3 points, which is a lot less than 1%. So that was encouraging. I do think it may have been those strong technicals and traders playing off of that support level that I showed you. Let me just look at that again in closing. And thinking that, yeah, this actually could be support and it could be something to buy. So that was a sign of strength, technical strength for the market. Breadth today was interesting. The defensive sectors that have been leading the way this year sold off. And it was the more cyclical, more risk-on sectors, if you will, that were good performers today. Financials did very well, which was good to see. So interesting market. The breadth is improving. I talked a little bit about that yesterday. The technicals seem to be improving, at least on a short-term basis. But we've got a whole lot of information coming at us this next week that could push the market noticeably in either direction. It's going to be a very volatile year, folks, no matter how we slice it, and I'll be here to keep you up to date on what's going on. And again, look for the weekend commentary. That's the one I really want you guys paying attention to. Thanks as always for watching and listening, and I'll be back very soon. Bye-bye.